Hey everyone, and welcome to The Deep Dive. Whether you're a seasoned real estate investor or just kind of starting to dip your toes in the water, today's deep dive is going to be right up your alley.
It really is.
We are talking all things Chicago real estate, and more specifically, we're going deep on a strategy called Core Plus Investing.
Yeah, and to guide us through this, we have the insights of Michael Linton, who's a real pro in the Chicago market.
Oh, absolutely, and he's been in the game for nearly 40 years, so he definitely knows his stuff.
He does. He shares a ton of his experience on his website, chicagodealflow.com. It's a great resource if you want to really dig in.
Awesome. So Core Plus Investing, I feel like I've heard the term thrown around, but honestly, what exactly does that even mean?
Right. So it's all about finding that sweet spot, right? Between like those low risk, low reward investments and those high risk, high reward gambles.
Okay, yeah, that makes sense. So where does Michael kind of like plant his flag with Core Plus, especially when it comes to Chicago?
So he uses this really cool analogy about used cars. Okay.
Imagine you've got like a spectrum. On one end, you have that certified pre-owned car from a reputable dealer.
Okay, I'm with you.
That's your core investment, low risk, reliable, but, probably not going to appreciate in value.
Right.
And on the other end of the spectrum, you have that fixer-upper in the dusty garage.
Yeah.
That's your classic value-add play.
Okay, yeah.
High risk, but man, if you can pull off that restoration, potentially high reward.
Oh, for sure. For sure. So Core Plus is somewhere in the middle then.
Exactly. Think of it as finding that well-maintained used car, runs great, maybe needs a little cosmetic work, some strategic upgrades, but overall it's solid.
Okay.
It's already generating some income, but there's room to increase its value, and that's where Chicago comes in.
Okay, so what makes Chicago such a prime spot for this Core Plus strategy?
Well, Michael always emphasizes the city's diversity.
Okay.
And he's not just talking about its people, but its economy, too.
Right.
You've got tech startups in Fulton Market. You've got those big financial institutions downtown. You've got everything in between, which creates this like built-in demand for a whole bunch of different property types.
Yeah, it's not just a one-trick pony, right?
Exactly.
Yeah.
And here's where it gets even more interesting. Chicago is a city of neighborhoods,
Oh, yeah.
each with its own personality, its own real estate microclimate.
I like that. So how does Michael actually find these Core Plus gems within all these different areas?
Well, he looks for those areas that are kind of like in transition. He's not afraid to venture into neighborhoods that others might overlook right now, but he always makes sure to back up his instincts with like solid market research.
So it's a mix of intuition and then the data to support it.
Exactly. A perfect example is the near West Side.
Oh, okay.
It's transitioning from an industrial area to this really vibrant mix of residential, commercial, even a bit of that trendy Fulton Market energy is spilling over.
Oh, wow. So it's like he's looking for those areas on the upswing where the potential is there, but maybe it hasn't been fully realized yet.
Exactly. He's not just looking at neighborhoods in isolation. He's looking at how they connect to the rest of the city. Is there good transportation? What about amenities, parks, grocery stores? All those things that make a place desirable.
Right, right. So it's really about piecing together this puzzle, right? Looking at all these different elements to figure out if they add up to a good Core Plus opportunity.
That's a great way to put it. But, Michael would be the first to say that it's not just about finding the right neighborhood. The real work starts when you start evaluating individual properties.
Oh, okay, yeah. So how does he spot those diamonds in the rough? The properties that maybe don't look like much on the surface, but have that potential to really shine.
And that's what we're going to dive into in the next part of our deep dive. We're going to look at how Michael analyzes those potential deals, looking beyond what's obvious to uncover that hidden value and, of course, assess the risks involved.
All right, well, I am ready to put my metaphorical hard hat on and get my hands dirty. We'll be back in a flash.
Welcome back to the deep dive.
Yeah,
It's like we're on this real estate treasure hunt, with Michael Linton leading the way.
absolutely. So we're talking about Chicago. We're talking about Core Plus. How does Michael actually spot these diamond in the rough properties?
Okay, so picture this. You're walking down the street with Michael in, say, Pilsen.
Okay.
He's really excited about Pilsen right now.
Mm.
You might see like a really cool old building, maybe it was a factory or a warehouse or something, and you're like, wow, that's a beautiful structure. But Michael, he sees beyond that worn out facade.
Right, he's seeing dollar signs where we're just seeing a fixer-upper.
Exactly. He's already picturing like how that space could be transformed, maybe into some loft apartments or really cool office space.
Right, right.
He's always thinking about what's the highest and best use for this property.
So it's not just about finding a building in good condition. It's about finding a property with, like, good bones, right?
Yeah, like a good story. It just needs like a new chapter.
I like that. A new chapter. That's a good way to put it.
Uh-huh.
But he's also looking at those more subtle things, right? Like what's happening in the surrounding market.
Oh, absolutely. He's like a detective when it comes to that stuff. He pointed to like all those boutique hotels popping up in the West Loop, and he sees that as a sign that, demand for office space in that area is probably going to go up. So those older office buildings nearby, the ones that might seem a little outdated, those become like prime core plus targets.
Oh, that's so interesting. So it's about connecting the dots, right? Like seeing what's happening around a property and kind of figuring out how it fits into the bigger picture.
Exactly.
Yeah.
And he's not afraid to get his hands dirty. He'll dig into the financials, look at the rent rolls,
Mhm.
go through those lease agreements with a fine-tooth comb.
Right, right.
He wants to see how the property's performing now, but more importantly, like what its potential could be.
Yeah, you got to know where you're starting from to figure out where you can go.
100%. And he's not just like staring at spreadsheets all day. He understands that real estate is about people too. He's thinking about those ideal tenants, what they want, what they need, how he can make a space work for them.
So it's about adding value, not just for the sake of it, but because it ultimately benefits everyone involved.
Exactly.
But at a certain point, you got to look at the numbers, right? How does Michael actually decide if a property is worth the investment?
Right. So that's where things get a little technical. He looks at cap rate, which tells you about the potential return on your investment,
Okay.
and IRR, which factors in the time value of money. It can get a little complex.
Okay, so those are some big terms. Break those down for me. Let's start with cap rate. What is that all about?
Sure. So think of cap rate like the interest rate you get on a savings account, but for real estate.
Okay.
It's a way to compare the income a property generates to what it's actually worth on the market. Generally, a higher cap rate means there's potential for a higher return, but it could also be riskier.
Got it. So like a property in a neighborhood that's up and coming, that might have a higher cap rate than one at a more established area.
Yeah, exactly. Because there's more uncertainty involved. Now, IRR, or internal rate of return, that one's a bit more complex, but basically it tells you how much you can expect to make on your investment each year, taking things like cash flow and appreciation into account.
Welcome back to the deep dive. I feel like we're knee-deep in spreadsheets and financial calculators right now, which honestly, I'm not mad about.
This is where Michael really shines. He can spot a spreadsheet error from a mile away.
Oh, I bet. But it's more than just crunching numbers, right? He's looking for that story behind the numbers.
Exactly. Anyone can look at a financial statement, but Michael, he wants to know the why. Like if a property has a ton of empty units, he doesn't just assume it's a bad location.
Right.
He digs in. Maybe the old owner wasn't marketing it right, or the rent was sky high, stuff you wouldn't see just for the numbers.
So it's like detective work almost.
100%. And that leads to one of his biggest things, due diligence. You got to know what you're getting into.
We've said due diligence a few times. What does that actually look like for Michael?
Okay, so first, he goes deep on the financials. I'm talking rent rolls, expenses, taxes, the whole 9 yards.
Okay.
He's looking for anything fishy, any surprises, but also those hidden opportunities we talked about.
So what might scare other people off could actually be a good thing.
Sometimes, yeah. He's also thinking long-term, like what are the costs going to be down the line? New roof, HVAC, that kind of stuff.
Makes sense. Got to factor that in.
Oh, absolutely.
Yeah.
But, he's not just glued to his computer. He goes and walks the property, talks to the people living there, gets a feel for the neighborhood.
That's so important, right?
Yeah.
Because the numbers only tell you so much.
Exactly. And that's what sets Michael apart, is he knows how to assess risk.
Right. Because there's always risk involved. How does he find that balance?
So he's got this whole system, goes way beyond just the money stuff. Neighborhood trends, the competition, even what's going on in the economy as a whole. He's always asking, like, what could go wrong? And am I prepared for that?
Smart. So it's not just about finding a good deal. It's about protecting yourself, too.
Exactly. He's also a big believer in not putting all your eggs in one basket. He'll invest in different neighborhoods, different types of properties.
Okay, so diversification is key. But let's be real, this real estate stuff can feel overwhelming. What would Michael say to someone who's just starting out with Core Plus?
Take a deep breath. It's a marathon, not a sprint.
Right.
But seriously,
Oh.
I think he'd say education is everything. Learn the market, find some mentors. Don't be afraid to ask a million questions.
Yeah, build those relationships.
For sure. And Michael's really great about that, sharing what he knows. He's got tons of resources on his website, chicagodealflow.com.
Awesome. So for anyone listening who wants to learn more from Michael directly, that's the place to go.
Definitely. Articles, case studies, even like practice deals he walks you through.
Wow, that's fantastic. This has been such a great deep dive. We've covered so much about Core Plus investing, from finding the right properties to managing risk, the whole deal.
It really has been fun.
Before we go, I'm curious, we've talked a lot about the financial side of things, but what about the bigger picture? How does Michael see his work, impacting Chicago?
That's a really good question. For Michael, it's not just about making money. It's about making a difference. He believes that doing Core Plus right can really help neighborhoods, create jobs, make the city a better place.
So it's about more than just the buildings themselves. It's about building up the community as a whole.
Exactly.
That's incredible. Well, on that note, we'll wrap up this deep dive into Core Plus investing in Chicago. Big thanks to Michael Linton for all his wisdom.
Absolutely.
And to all of you for listening in. We hope you learned a ton, and who knows, maybe you'll be the next Chicago real estate mogul. Until next time, happy investing.